All right, y'all, back to work. CPI is behind us, and we have one of my favorite chart patterns setting up for tomorrow morning. Every once in a while, we get this perfect combination of the higher time frame, the lower time frame, and we get this chart pattern we call a slingshot reversal. Over the past couple of years, my biggest winning trades have been these types of slingshots. So I want to cover entries, I want to cover exits, I want to make sure you guys know how to capitalize, make some money on these slingshots, and what should be a fantastic trading session tomorrow morning. So charts are ready. Enough of the intro. Let's dive right in, roll those sleeves up, and find some more winning trades on Thursday morning. S&P SPY ready to go tonight. Nasdaq triple Qs are always ready. I have three simple but very important clues on these charts right now. They're telling me where I think the winning trades, the money is made tomorrow morning. The first clue is right here on the hourly time frame. It is easy to see right now the buyers are in full control on the S&P SPY. Buyers full control. Nasdaq triple Qs. I like to use the hourly chart as an overall directional filter. And the first clue right now is pretty obvious. The buyers are in full control of momentum. Now, I've got two arguably more important clues on some lower time frames. Help us time the entries for this stuff tomorrow. Make some money on the entries tomorrow morning. Before we do that though, let's check schedule for tomorrow because we do have a couple things on our radar tomorrow. In fact, there are three things on my mind for tomorrow. First things first, we get jobless claims and the PPI number tomorrow morning. Probably not going to be as dramatic as the CPI we saw this morning, but definitely something I'm watching for tomorrow. I would argue though, the bigger news of the day tomorrow, I would argue, is a bit later on in the day. We have the long bond auctions tomorrow afternoon, the 20-year bond announcement, 11 o'clock, and the long bond at 1 o'clock Eastern time. We know that debt, ever since the big beautiful bill came out of the House a few weeks ago, everyone's wondering about debt right now, and those are certainly some things that could cause some extreme volatility tomorrow afternoon. So those are my radar for tomorrow as well. And one more thing, not for tomorrow, but for next week. Next week is quad witching. I'll be off on break next week, so no newsletters published on the YouTube channel next week. So just be aware of that coming to the pipe for next week during quad witching. We got jobless claims and PPI tomorrow at 8:30. And again, keep your eyes on that 11 o'clock 20-year, that 1 o'clock 30-year, those bond auctions tomorrow afternoon. Let's get back to our charts though, because it's good to know when the news is, but the money is made on the charts. Let's now dive into those tick charts. We don't trade time charts in our trade room. And by the way, if you're watching for the first time right now, that is a 7,000 tick chart. All the time frames in the upper left-hand corner. Remember, tick charts are based on volume. They make the entry timing a whole lot easier. We trade off tick charts exclusively in our trade room. And by the way, that is the 21 EMA in case you're tuning in and watching here for the first time right now. There are two really big clues on this tick chart right now. One clue is a strong run down. We're seeing separation away from that moving average. Now, why would a strong run down be a big clue? Because anytime we see a strong move in any direction, in this case going lower, we expect these sellers to want to retest that low. It's a big clue, gives the bears a lot of momentum here in the short term. The second clue here, and the final clue overall, is we have three ranges on this chart right now. Got a range right there, a range right there, and then all the way down here. If you were around 2 weeks ago, we talked about that range down there, that looking lonely down there. So three ranges on the chart right now. Now, why would that be important? Well, first of all, this range right here is the most recent range. Ranges love to rotate. And we use things like symmetry, right? The amount above, the amount below. We use triangles, expanding triangles. So one of those ranges, the most recent range, is a magnet. It likes to rotate back and forth. The range above us and below us, these ranges love to give us breakout pullbacks. I love, by the way, how that channel lines up off that low, off that high. And of course, the range below us here, again, this range is a few weeks old, but that range right there would love to get a breakout pullback there as well. So we're overall bullish on the hourly time frame, and this is where the slingshot reversal all comes together. It's a bear range in an overall bull market. One of my favorite trades right now is to get that slingshot reversal, run it lower, bear trap down here, and then slingshot up off of that low. In fact, I've got three different entry tactics I want to share with you guys to time the entry on that slingshot. We'll cover that in just a moment. But I'll tell you right now, if we go higher here right now, I like the breakout pullback off that range. I love how that channel is lined up. Now, we're an overall bull market, so timing this entry on this, I need to use a pattern, which I call a crown reversal pattern. If you're in my free video classes right now, you know what I'm talking about. It looks like this. Up here, this would not be a good spot to be a buyer right now. It wouldn't, right? Because again, that strong run down, wants to retest, breakout pullback. So not a great spot to be a buyer, great spot to be a bull trapper, right? Look for a bull trap. So to do this, I want to see buyers try once, I want to go lower, and I want to see buyers try twice. And the goal, the most important thing in this one is I want to get short above a prior swing. We saw a great example of that this afternoon where it kind of went up, began to roll over, and see what happens as it rolls over. Everyone is trying to short above that prior or one of those prior swings. So as we go higher here, I love the idea of getting this thing whacked back down, get some buyers trying, and then looking for, again, that lower low in price, then move right above that high, that strong red candle closing below that 21 EMA. I like that bull trap off that high a lot. Targets, of course, back off at the low. The amount above the range, the amount below the range, that will give us an idea of where to take our profit targets tomorrow, and also to where we can look for that slingshot reversal going back up into that range up overhead. And again, we'll talk about that a bit later on in the video. But what if I'm wrong on this? You know, we're bullish overall, a lot of stuff going on right now, tax deal, trade deals right now. What if I'm wrong? What if this thing spikes up and goes higher? Well, what do we know about ranges? We know that ranges love to break out pullback, right? So there's two ways in which I'm going to adjust my strategy a little bit if we do see this thing spike higher here and this thing gets blown out going higher. One of them is kind of your typical two-legged pullback, right? So one leg, two leg. I'm going to use the top of that range now for a breakout pullback. I'm going to use that 21 EMA for a classic failure pattern or a bear trap pattern. One try, two try, trap those bears in and squeeze those stops running higher. Remember too, when it pops up like that, don't forget these buyers are hunting for that recent high up there. If I can get some separation off that moving average, I can add to my winner with this add-on pattern, right? Shallow pullback, higher high in price. I teach this in a lot more detail, by the way, in our free video classes. So again, if I'm wrong on this rolling lower here, if we spike up and pop higher here, I'm now going to start using this range as a breakout pullback. And to do that, one of two ways to do it is a two-legged pullback. One leg, two leg around that high. And all we do is bear trap, below moving average, add to our winner. Targets are easy. Back up, take at the high at 74 3/4. Here's a question though. What if we pop up and go sideways into a range? These can be tricky, but I'll tell you right now, they are one of the easiest ways to make a lot more money. Why don't we cover that in 2 seconds? But before we do that though, let's slow down for 2 seconds right now, because I know a lot of you guys watching right now, you know these patterns already. You're making money with these already. But if you're here for the first time right now, this might be a brand new strategy. Don't you worry though. I teach this entire system in my free trading classes. In fact, I have a ton of examples, bear traps, add-ons, slingshot, reversals. Guys, the markets are way too good right now not to be making consistent profits. So I want to help you guys time better entries with these techniques, make more money with these techniques. What I'll do is I'll put a link up top here for you. Upper right-hand corner, hit that link that popped up there and take that free trading course, because the strategy I teach in that video course will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. More importantly though, I want to teach you all my 4 favorite entry setups so you can time better entries, make a lot more consistent, repeatable profits. Guys, bottom line, if you're still missing the best entries right now, if you've lost your confidence in your current trading strategy, hit that link that popped up there. Watch that free trading course. You're going to love all the trade examples I include in that short video series. The best part is it's 100% free for you. Keep in mind too, guys, I'm going to put all the important links you need to learn this entire strategy. Again, start first on the free video classes. I'll put all the important links you need to get started down below the video tonight, the description of the video. And don't forget, if you're on Twitter or X as they call it these days, I post a ton of charts and videos and mindset stuff on Twitter X. Give me a follow. Again, all the details you'll need to learn more, hopefully earn a lot more because of it. I'll put everything you need below the video description of tonight's video. All right, so now you know where to go. If you're tuning in for the first time right now and this is way over your head, now you know where to get the link, take the free classes, learn the setups, start making money on your own. Most folks start making money on their own, all from that free video course. Okay, I want to talk about that slingshot move going lower because that could be one of our biggest winning trades of the week this week. But first things first though, what if we pop up here and go into a new trading range? Now remember ranges are magnets and they love to rotate. So if we take a new range up here, combine that with a previous range, now you start, see what I'm talking about here? Now think about this. If we run lower here now, this is a great place now to basically trade a breakout pullback off the previous range. Use a bear trap below that 21 EMA. I always like to use bear traps because I want to run stops, right? Stops are right above the highs right there. I can run stops and squeeze higher. And as always, once we get that bear trap triggered, we then look for that add-on, a lot of examples of these in the free video course, that shallow pullback, that higher high in price. We add to our winner. The easiest way to make a lot more money is to add to your winning trades. And again, we know now the amount below the range, the amount above the range, target, obviously 74 3/4, today's CPI high, that's a target for us as well. So think of that variation of a breakout pullback. So 3 ways I'm going to trade this as we go higher. Up and bull trap off the high, back down to take out that low, or pop up, 2-legged pullback, pop up into a range. I love that idea, the range up there, rotation, right? Ranges, they love to rotate up off that low. Any one of those could be easy winners for us tomorrow morning. Now, let's get serious and talk about that slingshot reversal. Whenever we combine a bullish overall market on the hourly time frame with a bearish range on the lower tick charts, that's the recipe for a slingshot reversal. Before we dive into it though, if you're enjoying this video right now, please help me grow this channel by hitting that like button and make sure you subscribe. I know we're all busy people these days. I appreciate you all tuning in and watching my stuff tonight. So thank you guys so much for all the likes, subscribes, all the ongoing support. I can feel the love in the comment section below. So thank you guys so much for tuning in and supporting the YouTube channel. Now I promise I'm done begging for likes and subs. Let's now dive in and talk tick charts here right now. And on the Nasdaq, it is the same exact scenario here. We have a very strong rundown. We know that anytime we see a strong move lower, the sellers are going to want to pull it back and retest that low. That's why I love the idea. Again, 3 ranges. Range right there, range right there, and boy, a lonely old range down there. Look at that range down there. Again, it was a while ago, but if you know my style of trading, if you're with me in my trade room, you know that breakout pullbacks are just a matter of time. They're almost a guarantee. They always happen. We simply don't know when they're going to happen. So that range down there is looking lonely down there around that 21,694 half. We'll call it 21,700 on the Nasdaq. So all the same stuff applies here on the Nasdaq we talked earlier about on the S&P. I like the idea of that pop higher. I like the idea of watching those buyers come in, try once, try twice. And again, the key is that as it rolls over, I'm looking to get in above a prior swing. It's basically a technical bull trap like I teach in the video course. Or it pops up, 2-legged pullback for a breakout pullback. Or always one of our favorites is the pop up into a new trading range. And we simply use that new range as a magnet, the previous range for a breakout pullback, and we're slingshotting off of that low. The goal is take out that high, 22,106. Now, as we go lower here, how do we buy a slingshot reversal? Well, here's the problem. The problem is that even though we're overall bullish on the hourly time frame, as we run lower here, That's a lot of momentum for the sellers. And because of that, we know that anytime we see a strong move down, sellers are going to try to retest that low before we make that run back up and basically resume the overall bullish trend. So if we understand that dynamic, again, we're overall bullish, but very bearish in that scenario in the short term. That momentum means going lower. I'm going to look for another one of those crown reversal patterns. This time, it's a bear trap off that low. Now, pay attention. This is very important because I don't want to force this entry. We can all agree this is not the best place to be selling, right? You're selling low into support. Again, great spot for a bear trap. To do that, let those bears try once. Let them try at least twice, at least a higher high in price, and I want to get in underneath that low. Okay, again, the reason for this is because as we go lower, as we go higher here, the sellers are going to come in and try to hold the underbelly of that range and take that thing back down again. I want to have at least my one-to-one target. I want to get that stop up to point of entry, get rid of all the risk, lock in some gains, right, on that reversal. And hopefully I'm wrong. Hopefully it keeps going, right? But a lot of times it doesn't. And so whenever I'm fighting against that momentum like this, I want to make sure I'm getting in underneath prior swings. And maybe it's all for nothing, right? Maybe it rips higher anyways, but at least that way now we've got ourselves protected. So that's our crown reversal off that low. What happens a lot of times is they'll run lower, we'll get that bear trap off that low, and again, maybe it'll pop up and go higher here. A lot of times what happens though is it'll pop up, it'll hold the underbelly of that range, and now we'll get the retest trade. Now, you know how much I love retest trade. What I mean by that is that the bears come in and sell the short here. When they go back and take out that low, anybody who sells up here, they take their profit down at that low, right? So sellers up here become buyers down here. This is a great place now for a bear trap. Now on this one, I can be a lot more aggressive. I don't need that crown reversal now. I can be a lot more aggressive because now I know where that bottom is. And I know that anyone who sells up here, they're buying their way out back here. So in this one, it's a typical bear trap pattern, right? It's basically one try, it's two tries, a two try bear trap. Now, I would not complain about a crown reversal, right? I would not complain about that. It'd be great if it was also a crown reversal, but it's not required, all right? Very important to understand. When I'm going against all the momentum, I need to buy as low as I can underneath a prior swing. It's a protection mechanism to protect against losses. But once I retest the low now we know where that bottom is now. I can be a lot more aggressive on this, and that simply means now bears once, higher high, bears twice. I can buy right into the stops and squeeze the stops going higher. Again, if you're in my trade room, you know how much we love these retest trades. And remember, please, on a retest trade, these oftentimes will spike up, separate off that moving average, higher high in price. And again, if you want to make a lot more money in trading, be looking to add to your winners. And that's a sequence right there, right? It's a bear trap and a retest and an add-on as we go higher. And again, remember, these ranges, they want to rotate. This is where that slingshot reversal idea comes from. This is where the name comes from, right? So it's slingshots off that low, the amount below, the amount above, and these can get very, very good because remember, we're overall bullish. We're not a bear market, we're overall bullish. So this can really slingshot and snap up and rotate all the way back other side of that trading range. Now, one more variation of this, right? One more variation of this. For example, we may run lower here and we may not get a crown reversal here. There may be so many buyers down here, it may just whoop and run right back up again. If that happens, remember, we'll make a small adjustment now. If it bounces hard off that low, all I do is I start looking for a channel. I mark off the high, I mark off that low, and I'm trying to get in again under prior swings, but the goal is I want to get in off the low of that channel, right? So one small variation of that is if it bounces hard off that low, I'm going to now start watching for off the highs, off the low, and like we say in our trade room, in our videos too, the first test is always the best test, right? So it runs lower, it bam, bounce off that low, grinds back up now. We're not chasing after it. Trust me, that voice in your head will want to chase after it. Mark a trend line off the high, bring that trend line off that low, find those prior swings and get that first touch off the low of that channel. Any of the entry patterns I teach in the free video course can be applied on that first test is the best test of that channel. And one more thing I want to talk about tonight is as we're going lower, what if we went into a range down here? Now think about this, right? What if we ran lower and began to get chopped up in a range? Now remember, the recipe for a slingshot reversal is a bullish overall bias we have in the 60 and a bear range. So now you probably know how this one goes, right? Wait for a breakdown. Now on this one, I can be a lot more aggressive on this one because that range will slow down all of this momentum. Run it lower, get below that 21 EMA, bear trap once, twice, squeeze those stops. And again, remember, this is where the idea of a slingshot comes, right? As it rotates up off that low, the amount below, the amount above, we resume the overall bullish trend. Again, that's where the idea slingshot comes from because we're overall bullish, right? So I love the idea. I would not complain at all if we sink lower overnight. We're going to look for the potential now to trap those bears in. And again, right, as it rotates now, keep on looking for ways to add to your winners. A lot of examples of those inside the free video course, right? And slingshot, the amount below, the amount above, profit targets, let that sucker run going higher. All right, guys, that's the game plan for tomorrow. Which one of these variations are we going to see? I don't know, but now the game plan's ready. We have a tool in our toolbox for no matter what the market throws at us on Thursday morning. Now, speaking of Thursday morning, the place to be is in our trade room. Guys, the easiest way to make money with this stuff is to learn and trade along every morning with us at the opening bell. I'm going to put all the important links you guys need to learn the system. Again, start first on the free video course. Enjoy all the trade examples I share in that free video class. Then come join us. Come trade with us every morning, and we'll do it all together. In the meantime, guys, hope you learned a bunch tonight. Hope you earn a bunch tomorrow. Be well out there. Be nice to each other, and you better be here next time. Adios, amigos. Bye for now.